And Annette, we're going live.
Speaking of live, we have Vicky live. Hey, Vicky. Good to see you.
Thank you. I got the hint last time.
A little more than a hint, but you got it.
We all want to see you, Vicky. I miss not seeing people when I speak to them.
Oh, I'd rather see you over a cocktail or a lunch.
All right, you're on. We'll make sure we arrange that. Not on in a public recorded forum.
Someday.
Even a year on, we're pretty close to it. That routine of walking over either to the 7th floor of building 2 or even to the Learning Commons, it's a miss. It's a miss. It's too bad that we can't get together.
I know it's 5 o'clock. Nene, are we missing? I know we got Jeff on. We've got Vicky.
Janae is entering at this moment, and we're just missing Eric. Were you able to hear me?
Yes, I did. Yep.
Okay.
Yep.
Okay. Thank you.
Okay. No, thank you. Thank you. Let's see. We'll give him just another minute, and we can get started.
Yes. We're just missing Eric now.
Okay. Yep. I just saw Maurice and Maurice.
There's Eric.
There's Eric.
Okay.
Awesome. Hey, Eric. Can you hear us? Oh, he's connecting.
Mm-hmm.
Oh, there he is. Hey, Eric.
Hi guys, how are you?
Awesome. Doing well. Doing well.
you.
We can go and get started. Good afternoon, everyone. And Nene, if you mind taking the roll.
Yes. Mary Kate Murin,
Present.
Max Starks,
Here.
Vicky Krause,
Here.
Eric Hagopian,
Here.
Maurice Lindsay, Maurice, Jeff Sattler,
Here.
and Janae McDonald.
Present.
Awesome.
Thank you.
Why don't we jump right in? Dr. Cook, fiscal year 2022 budget considerations.
Fantastic. Thank you, Mr. Chairman. Good evening, trustees. Great to see you virtually. I'll offer, a few comments, a little bit of an outlook, then I'm going to turn it over to Andrea Nathanson, who's going to go through the deck that was included in the packet. Just some framing. Now we really are starting in earnest to look ahead to preparation for the fiscal year 2022 budget. We're definitely engaging across the college with a great deal of interest. So we have upwards of 35 budget managers who are submitting requests for next year. This is sort of operational and equipment. So we're definitely going through that. Next month, as is our practice, you will see a first draft of the budget for your consideration. And I think that will be a really helpful conversation and starts to kind of help us with priorities. And I think to that point, if you can be helping think with that framing, what are those sort of key places we want to be sure that we are sort of moving the budget towards? What are those priorities? We can certainly map that to some of the plans, the helpful plans that we have in place. Here is some food for thought. And again, Andrew's going to sort of dig this out a little bit. One is obviously, where are we with Building 20 and the School of Health relocation? Really hoping for some clarity from the state, from DCAM by May, which would allow us to potentially have a position in there. It feels a little bit, to the college's perspective, like a little chicken and the egg. How do we ask trustees, let's say, for support via reserves for a contribution to that project, when you'll ask, well, what's the state got on the table? And the state in turn is going to say, well, until we have the full and final funding stack in hand, we're not able to tell you what we have. So there's going to be a little bit of a back and forth that way. And I can tell you we are making every phone call to try to get that part resolved. I was on the phone myself with a key DCAM administrator last week. So again, we'll see how that plays out. We talked about this a little bit. I know it'll probably come up a touch in the investment subcommittee discussion. But when we have under investment now, we looked and we saw all in, I think it's about 18 million. There's a conversation around how much of that is unrestricted, and that's really the sort of key reserve number. We'll see how that firms up. We won't have the number until the audited financials, which typically come after the fiscal year. But I think we can still do well by sort of capital projects. And what we don't think, right, is that we're going to be able to spend the federal money that we have on, let's say, that relocation move. That's not looking promising. In the meantime, one other piece to sort of put out there that's not on the agenda is the important consideration of a fee freeze for students. The idea of given everything that students are contending with this year, heading into next year, what is our ability, what is our wherewithal, quite frankly, to hold fees consistent? That would clearly mean giving up probably multiple millions in revenue. But I think given everything that we've contended with, it's absolutely worth the consideration to look at that. And that would change then how we even see things like $6 million from the feds. So that's some food for thought. But again, looking for your outlook, looking for your questions. And let me have Andrea dig into this a little bit and see where we go with this part of the agenda. Thanks, everyone.
Thanks, Dr. Cook.
Great, thank you, and good evening to all of you. So as Dr. Cook said, we plan to bring you the detailed budget next month, but wanted to, at least for today, kind of talk about a few high-level things that will impact the budget that we can really talk about at this point, and sort of separate from, you know, the detailed budgets that the budget managers are inputting now. So one of the things, I don't know if, I think it was the day after the last Ways and Means Committee meeting, we've learned what our award was on this new federal funding, the COVID relief funding. So you can see on this slide, CRRSAA, it's a mouthful. It's also called HERF, HEERF2. So it's easier for me to say HERF2, but in any case, it's the next round of federal funding for COVID relief. And so for a stick, the total award is $8.1 million. The reason the amount is so much higher than the CARES funding is that the funding formula, the allocation formula is based on considered headcount this time, and it didn't in the CARES funding. So that actually favors community colleges. So we did end up with this $8.1 million. And I just wanted to, we know this should have a positive impact on our budget for next year. Last month we said we sort of previewed a potential $4 million deficit, and the operational factors haven't really changed. They might as we go forward, but this is definitely a benefit to us, and we really need to think strategically about how to use the funds. And so I thought it would be helpful just to give you an overview of how these funds break down and what we might be able to use it for, and what we know and what we don't know at this point. So again, the award is broken down into student aid that needs to go directly to students and institutional funding. And so the breakdown, the student aid portion is just under 2 million, the same amount that we had for student aid in the CARES funding. And then the institutional portion is 6.1 million. And so for both parts of the aid, the spending period is a little squishy at this point. So what happens is, we get these documents that tell us, what the rules are, and then we get some other guidance that gives us some supplementary information that so far is a little confusing. We're trying to get more clear information, but for now we know that the very earliest date that we would have to finish spending the money is January of 22. It's possible that we've also heard a date of May of 22 and another date of potentially September of 22. So what we don't know at this point is how much time do we have to spend this money. We know that it can cover costs starting basically in January of 21. So we don't know if we have.
Andrew? Yep. Thanks, Dave. I just, I'm sorry, I did go through the slide. before, and thanks for kind of walking us through that. I guess my only question here is, really around this lost revenue concept, right? I know it says guidance TBD, so hopefully you can focus the conversation here around that. 'Cause I think that's the only point here on the slide that's really kind of suspect. So just curious what your thinking is for next month when we look at the financials for the first time, how you plan on attacking that.
Yeah, so we're waiting for guidance on that. I attended the statewide community college CFO meeting last week, and everyone has the same question. So the wording in the award, says that we can use this funding for lost revenue, and so we can come up with a calculation that says if not for COVID, what do we think our revenue would have been, and then calculate the difference between what we expect our revenue to be and what it would have been. And then the question is, does that need to be attributed to certain expenses, or do we just get to sort of take this credit for lost revenue? And that question has not been answered yet. So there are people, who are looking into that to get clarification at the federal level for what we can do with that lost revenue amount. So that's where we might have a lot of flexibility, but we just don't know the rules yet.
Yeah, that's spot on. Because I was thinking, how tight do we have to tie the lost revenue to COVID? Like, how do you do that? Like, what's that process, right? I mean, how do you determine that, I lost a particular revenue because of COVID? So I was interested to see what the guidance is going to look like, and then how you turn that into the pro forma financials next month when we look at it. So more to come there. Good.
Yeah,
and we will, sorry, Andrea, we will, I think we've talked about this, I'm losing track of some of the meetings, but we'll need to defend it potentially, not just in a federal audit, everyone, but a state audit. We have been audited by the state around federal use of funds. So obviously we will want to be clear and have documented the justification for the model.
Yep, makes sense.
Right. And so there could be some flexibility. Also, it would be helpful. We don't yet know what the reporting looks like. If we can see what the reports look like, then we can get a better sense of, what the allowable uses might be. So again, that's something that hopefully we'll have more guidance in the next month or so. But, in any case, I think that another thing that's different here is we can use the money for potentially to pay off student balances if we think that will be helpful and if we get their permission. So that's just another thing that's different in this funding. And the other thing we can do is we can take, indirects. So it could be up, we don't know yet what the approved percentage would be, but that's something that would, essentially go to the bottom line. And so that would be helpful as well. So I think that, what we're really trying to do as a team here is think about how to be strategic about the funding. And that's where also, if you all have input, that would be helpful. What we're really trying to do is maximize the positive benefit to students and maximize the positive benefit to the college as a whole going forward. So what are the things that we can invest in that will have a lasting impact? Because otherwise it's a 1 year sort of, money dropped in our laps, essentially. I've heard the word windfall. I wouldn't use that, but essentially, this is money that we can use within a short time period. And so, I just want to make sure that we're being, strategic about making investments that will have a lasting benefit, if at all possible. So, that's really the
When I saw this, I thought to myself, with respect to the student aid, this is above and beyond what we would normally, have, correct?
Yes.
Okay, so I'm just thinking about something that we can use this for to prime the pump. I mean, we have low enrollment, so perhaps there's a way for us to incentivize people to come to us for education, that we would be able to give them a shot in the arm initially, but perhaps they would then continue to invest in an education at STIC above and beyond that which they receive some additional benefit for.
Sure, that definitely makes sense. And I think what we need to do is figure out what are the mechanisms that we can use to do that within the rules of how we can spend the funds. And so, I'm sure we'll be able to focus on that as we move forward. Any other questions about this funding or the impact on the budget?
What's the timing?
Sorry.
I'm sorry. What's the timing on actually receiving it?
So the money is available now for us to draw down. We are still, Jason, a little later, will talk about the CARES funding, and we're still in the process of spending the money from the CARES funding. And so we'll use that before we use this money. But yeah, it's available for us to use, now. Was there another question?
Yeah, so actually that created a question, but then I had a different question. Is
Okay.
there any concern about not drawing down those funds that if, I don't know, something could happen and they could get pulled back? Should we draw them down and just set them aside in, a reserve account until we're through the CARES funding? Would be one question. And then not so much a question, but when we get to later in the presentation, there's some discussion about technology needs. And I'd be interested in how those could get funded with some of the money that is in this category.
Good question. I'll answer your second question, and then I might need help from my finance colleagues to answer your first question. So we definitely, there are definitely items in the IT 5-year plan that could be funded with these funds. So we'll definitely be looking at that carefully. I think that it'll partly be based on timing, so what of those projects fit the criteria and can we accomplish within the time frame that we have these funds available. So, but we'll definitely be looking at that. In terms of sort of how we're drawing down the money, I'll ask Jason or Dorothy to jump in and answer that question.
Sure, yeah. Per the regulations with this grant, we're not allowed to draw down the funds in advance. I believe that you're allowed to draw it down, but you have to use those funds that were drawn down within, a week or two after doing that. But as an institution, we generally don't draw down funds until we've incurred the expense. So that's unfortunately, we're not allowed to draw down, the bulk of it all in one installment.
Okay, thank you.
You're welcome.
Any other questions or comments on this funding?
I would just add, sort of some food for thought where you made a mention about applying to student balances. I would want to do everything that we can. Obviously, we want to help the students, but I would want to do everything we can to get out of this. I believe that the money is meant for us to invest in the college, invest in our students, so that we can, really, get out of this funk here at some point in the very near future. So I would love to see that. I would love to see money put into new people's hands. And so that we can have continued enrollment, perhaps an incline. And then with regard to the technology, we certainly talked a lot in our ad hoc meetings about the lack of, sort of technology. For example, in the automotive program, where we said we needed new resources with respect to vehicles to repair and maintain. So, it seems to me anyway that we've talked a lot about how we might use some of these funds, and so we've probably got the collateral in all of our discussions to be able to have a pretty good way forward.
Sure,
Yeah, I think
definitely.
sorry, Andrea, as we get additional clarity, whether it is technology with COVID-related expenses, right? It seems that the Commonwealth and federal is kind of leaning towards that, but I wholeheartedly agree, Eric. So we'll definitely keep an eye on that to see what we can do to enhance the institution as we move forward.
Great. Thank you. Any other questions or comments on this? All right, I think we can move forward. I believe Dr. Cook I don't know, do you have any more comments on this topic?
Only again, just that we will clearly be continuing this conversation with trustees, talking about it in the installments of the draft budget Again, I want to try to help make sure that we're avoiding surprises. The idea of what's the threshold for trustees to support, for example, that building 20 relocation. Right now, we know it's somewhere between 35 and 40 million on some of the early estimate budgets for that project. We've got the $5 million earmark from the legislature. If trustees, let's say, earmarked 5 million from unrestricted net reserves, we've got 10. If DCAM can put 25 on the table, right there, we're right there at 35. It's that kind of working over the next 3 months. I think that'll be really, really helpful. And obviously, pulling 5 million out of net reserves is not something that we take lightly.
Understood.
So I think we can move forward to talk about capital projects. And again, this is just a high level. So at the last meeting, we shared that we're looking at the FY22 capital budget to be 4.8 million. I think you're used to seeing the facilities budget at 3.1 million, and we're looking to add this 1.7 million for IT. And so I just wanted to give you sort of a high level overview here. And then at future meetings, we'll have Deb come and present more detail on the facilities budget, and Mary come present more detail on the IT budget. But for now, this 3.1 million for facilities, that is part of the 5-year plan. And, there are both 1-year projects in those plans and multi-year projects. And just to give you a sense of like the type of project that would be here, these are the projects that are not funded by DCAM. These are, institutional funded projects. And an example of a multi-year project is the police relocation. It's 1.7 million over 3 years. For FY22. So part of the 3.1 million budget in FY22 will be $750,000 for the police relocation. And again, that won't finish the project. There'll be some more, another 700,000 in 23. So that's just an example. For IT, this is new. The IT 5-year plan is a new plan, essentially to switch from being reactive to emergencies to do some proactive planning. So, as you probably recall, I wasn't here, but things like the core switch that failed a couple of years ago, and the board had to approve, 420,000 to repair that. We're hoping that this 5-year plan really puts us in a situation where we don't have those emergencies. And really, it's to replace overdue infrastructure, upgrades, and to make the technology more contemporary to support students, faculty, and staff moving forward. So, an example of this is we need to upgrade our wireless systems throughout the campus, and that'll cost 425,000, and that's something that's in the FY22 IT budget. So if we could just move forward to the next slide. This is really, as you probably don't need a reminder, but on the facility side, we have a total of $350 million of deferred maintenance. And so when we look at FY22, it's really just $3 million towards that. And you can see what the categories of projects are. So most of it is in this campus master plan, which does include this deferred maintenance. And you can just see this is really just to illustrate what the different categories of projects are. And again, these are dynamic. As different things come up, either we get more information about pricing, or we have to reprioritize because things fail in our systems. The plan is dynamic, but essentially this is what FY22 looks like. If we move ahead to the next slide, we have a similar slide for IT. Total deferred maintenance for IT is around 8 million. It might be a little bit less at this point because we've done some projects, but and I just want to clarify on this slide. You can see infrastructure at 24%, upgrade end-of-life switches at 7%, and this other network and service upgrades, 47%. That adds up to around 80%, and those are all really considered infrastructure. So what you can see here is that, there's a significant amount of IT infrastructure that hasn't been, historically kept up, and this 5-year plan is really to shore up the infrastructure to avoid, critical failures going forward. But again, this plan is also dynamic and will change as sort of priorities change. But overall, the dollar amount is really going to be required to avoid some of these, critical potential failures. So
Let me amplify one thing, Andrea, as we wait
Sure.
and see if there's comments. So as she said, next month, right, Deb Avery, our Senior Director of Facilities, is going to come and do a deep dive with all of you on specific projects. We hear you loud and clear. We knew there was your interest in hearing more about that. So we'll definitely do that. Similar with Mary Kozlowskis, right, our CIO. In April, she'll similarly do a deep dive so you feel that there's a level of specificity. And really, you've got a good sense of the need, that these are not nice to have kind of projects. So much of this has got to have kind of work. We want to try to plan that and map that for you. So we'll have them presented in the next couple months.
great, thank you. So I think that if we move on to the next section, Jason is going to just give you an overview of the CARES funding and how we've spent that and what's left. And then he and Dorothy will move on to the financials. So thank you.
Great, thank you. So we've got about $4,750,000 that we've been awarded through CARES funding and then the state GEAR funding. To date, we've spent or committed to spend 4.2 million of that. So as you can see on the pie chart, a good portion, about $2.5 million is for student scholarships. Next comes in campus safety, which is a little over $500,000. And then faculty online course conversion, which is just under $500,000. So more to come for that. But we are doing a good job spending that down. We just found out that we can get a no-cost extension as well on this. As with the new HERF2 money, part of the issue has been the guidance on spending it, but we've had no problem yet this year. So, and then the actuals from this slide are actually incorporated into the revenue and spending report as well. So we've got those in line with each other. Any questions about CARES or GEARS spending?
Yeah, Jason. So do we have earmarked how we're going to spend that 531 remaining balance?
We're currently looking into that. As I mentioned, we can get the no cost extension. So we don't want to spend it frivolously. We want to spend it strategically. But some of the things that we're looking into for this as well is that lost revenue calculation, right? That's a big one to see what and how we can spend those money, as well as the indirect. But we do still have IT needs, such as laptops for remote learning, cloud-based services, et cetera. So we do have, a few things in the hopper. We just haven't decided exactly how it's going to be allocated yet.
Does lost
go ahead. Along with that, and that is, have we determined what sort of expenses that we may need to incur for bringing students back on campus, and could this funding be used for that?
This funding could definitely be used for that, for getting them reintroduced back onto campus. We do have a committee that's working on that right now. The budget hasn't been finalized yet, but that's definitely a great use for these funds and would be used. Already we're using these funds for our stick squad, which is the folks who are on campus who check people in and out, take their temperatures and make sure that they're wearing the masks and everything. So in some manner, we're already using these funds for that. It would just be ramping that up for FY22. Depending on what the decisions are, based on, how we're going to get people back onto campus and when. Any other questions or comments?
Yeah, so that lost revenue concept applies for this funding bucket as well?
Yes. So what HERF2 rules came out, and they said that the changes from CARES to HERF2, so the new rules and allowable uses for HERF2 are retroactive back to the CARES Act. What we don't know, and we're still trying to find out, is if that means it's retroactive back to the beginning of the CARES funding or just to December of 2020 when the HERF funding was awarded to us. So at a minimum, it looks like lost revenue for spring would be on the table. But yet again, we got to figure out how to recognize that lost revenue, whether there needs to be offsetting expenses. So there's a few unanswered questions on that too, which is frustrating for us as I imagine it is for you.
No, understood. No, thanks.
You're welcome.
Key point on that changed, right, with the change in federal administration. So to show you how much we're sort of still subject to some of the buffeting there,
Yep.
This idea of lost revenue wasn't known until after January 16th or January 20th, whatever the date was. Yeah.
Yep. Okay. Thank you.
Any other questions? Yep.
I'll just add one thing, which is one of the reasons we wanted to share this with you is just as we show you the revenue and spending report, the actual activity going forward, I wanted to point out that this financial activity is embedded in that report. And so it's, one of the reasons why the numbers look different, let's say, than, like last year. This is mostly in FY. So you can see this financial activity in FY21, but it doesn't sort of pop, the expense side doesn't pop out at you in that reporting. So I just wanted you to know what's behind the scenes in terms of additional expenses that you see there offset by the revenue. So just to understand that it's in that reporting.
Okay. Thank you, Andrew.
All right. If there's no more questions, we can advance to the next slide.
Sure.
All right. And this gets into the cash flow projection that Dorothea will speak upon.
Thank you. So we currently have about $6 million at TD Bank. The chart that is shown here is a projected 19% decline in enrollment for spring. This is kind of a middle of the road projection between a best case scenario of 15% and a worst case of 25%. So kind of a middle of the road depiction here. So if we were to have a 19% decline in enrollment, we would end up the year with a balance of $900,000 or so. And then if we can go to the next slide. So then here, side by side, are the 19% decline in enrollment in the green on the left compared to the 25% decline, so-called worst case scenario, where we would end up with a balance of just over $400,000 at June 30th. And then can we have the next? So here we wanted to show you something just a little bit different. So this is a condensed, summarized version of the detail which we typically show you. So just wanted to see, what you thought about this. We start with our beginning fiscal year balance. Then the second column is the actual activity that happened through January 23rd, followed by projections, and then totals for the year in the last column with projected detailed balance of about 900,000. And again, this is the 19% decline. In your packet, we also showed the traditional detail that you're accustomed to in the following pages after that. Just wanted to get your take on how you felt about a condensed summary such as this. Any thoughts?
Yeah, I mean, for me, it's tough to put it in context. So we can continue to iterate. I mean, I get where you're going with showing the biweekly, is kind of tough to kind of glean some real insights there. But at least you could look at period over period and see where something popped. Here it's tougher to do that. But I'm certainly open to continuing to iterate these schedules to make it more meaningful to the trustees.
Okay. All right. Any questions on the current cash flow projection?
Nope, none for me. I like the scenarios. I know we call it worst case, but I like the significantly impacted case, or more impacted case, I should say. You did mention a 15%. You mentioned a range of a 15%. I know 19% gets us, like you said, 900,000. What does that 15% reduction get us?
I didn't do that one up this time around.
Okay. No problem. No problem. No worries. Okay.
Yeah, I don't think 15's, I think from everything that we've seen, I don't think 15 is in the cards for us. But I can certainly do that for you next time if you'd like to see it.
You mentioned it. That's why I asked. You mentioned a range, but that's fine. No worries.
Okay.
Thank you.
Do we know where enrollment is at this point, since we're at the first week of February? So we get a little bit out of the 19, 15, or 25.
Sure, and this is a little optimistic. We're trending about 21, 22% down. What we have now that we haven't had in the recent past are what are called flex terms. So somebody can actually start halfway through the semester. Those courses, as you can imagine, are more intensive and shorter in duration, but that's a new on-ramp that we have. And that's why we sort of hold out a little bit, because that 21, 22% might get knocked down a percentage point or two with some encouragement. But again, a lot of people have a lot on their plate right now. So we are actually, the 19 is just a little rosy, a little optimistic at this point, actually, for us even.
Any other questions? Okay, I think we move on to Jason with revenue and spending.
Thank you. John, can we scroll down to the revenue and spending report, which is just after the narratives? Let's see. Keep going. All right. Right. Can you just keep advancing until we get to the spreadsheet? So thank you. So basically all the narrative is reflected in this report right here. I just wanted to focus on some of the higher level aspects of it. So as we just talked about, our expected enrollment is about 19% down for the spring semester, which puts us at about 1.7 million under budget for revenues and 2.6 million under for expenses. Right now, we've been relatively conservative with our assumptions, so we could potentially see additional savings between now and the end of the year. But with this current version, it looks like revenues will exceed expenses by about $900,000. So one of the things, the big revenue piece that's down is student fee revenue, down about $2 million. But on the opposite side, we've seen payroll savings between full-time and part-time, which is about $2.1 million. So those just about offset each other. And it looks like we're going to be in a pretty good space as far as FY21 goes. Are there any questions that anybody has on this slide?
No, this is good. My first instinct last night when I went through this was to assume that there was no brackets around the 910, expecting it to be underwater, but then I had to really blow it up so I could really see it. So it's good to see it a positive at the based on this forecast. So no, good result. I know talking with Andrea, we had talked about potentially kind of laying this out even differently than what we're doing here. I know we've iterated this over time, but like get to more of a year-to-date expected spend, and then compare that to where actually is, as opposed to comparing it to like a just a complete run rate budget. But again, I like the outcome here. It's good work.
Sure, yeah, and we've got that. If you look at Roman numeral 2 and Roman numeral 3, I believe that's what you're referring to. We've got the January FY20 actuals and then the January FY21 actuals, and then that variance, so that you can kind of get a look to see. Actually, that variance is between the budget, but you can kind of eyeball it between those 2 years to see where we were at last year versus this year.
Yeah, the column I was describing was a fiscal year 21 forecast. Like, where do we expect to be as opposed to compared just to last year? Because things are very different now. But
I see.
But again, we'll get there.
Great. Thanks for explaining. Any other thoughts or questions on this? Great. Let's move to the next slide, please. All right. This is a graph that just kind of gives you a picture of what's been happening over the past couple of years, so that you can see our credits in FY20 on the left-hand graph. Went from about 101,000. We budgeted 92,000, and now we're at about 83 is what we're projecting. You can see on the right-hand side going from 23 million in FY20 down to 20 in FY21. Pretty significant decrease, but it just goes to show that we are weathering the storm relatively well, considering it looks like we're going to have a surplus of about $900,000 at the end of the year. So this year has been going better than originally expected. Any questions on this one?
Good chart. This is good to see.
Great. Can we go to the next slide, please? So this just kind of puts in front of everybody our DCAM spending. So we're going to start to include this just so you can see where we're at on a monthly basis when we meet. So you can see in FY 2021, as of January 31st, of the $1.9 million that we plan on spending this year, we've spent about $300,000 of it. We've had a lot of studies this year, so we're anticipating spending the rest of that money by June 30th. And just to remind everybody, these aren't our trust funded capital improvements. These are funds that we're given to use through DCAM through their state funding.
To the point about reiteration or iteration as well, one of the things we can do, not to think on the fly with my folks here, but we can show you the total 5-year allocation, which is 12.1 million, and show how much spend we've done on that, right? Because what we'll be able to bring in is past conversations. Building 17, when we had that structural emergency 2 years ago at the same time as the core switch, there was, I think, $1.1 million of this pot of money, if you will, that we applied to that project. So we definitely can work in the larger picture too, because DCAM, that's a change in practice, right? DCAM used to go year to year where we wouldn't know how much we would get. Now we've got this 5-year allotment, so we can certainly work that into this as well.
That'd be good. Thank you.
Excellent. I think we can move to the next slide, please. And one more. Great. So this is just a summary of where we're at with our institutional facilities spending. And it also gives you the breakdown of, the different projects that are being worked on. So as of right now, we've spent $700,000 of these allocated funds. We've had about 2 million roll forward from last year and about 3 million budgeted this year. So we do plan on spending a significant more amount of this money this year as well, but do anticipate having some roll forward into next year. Any questions on this slide?
Given we've only spent 700,000 to date, we've got a total pool of 5.1, but the carryover in the 3.1, we probably are likely not going to spend a lot of this year.
Probably another 2 million-ish we'll plan on spending this year.
Yep.
We've got a new project director, facilities project director, that's going to be onboarded very soon. And that will open up quite a few more projects that can get completed. So we do anticipate spending, quite a bit more of this. A lot of the work ends up getting done more towards the summer as well. So.
And how is COVID impacting these projects?
I can't speak on that. I don't know. Does anyone else want to chime in?
It's not a real correlation, but it's perennial, where certified studies, as you know, is the coin of the realm, and if you forgive that metaphor, but we can't do things over 300,000, right? Unless we do a certified study according to DCAM. COVID or no COVID, we've always struggled with getting those studies moved along in a timely way, right? We have to go into DCAM. They have things like their own bid room for some of these things. And that's really hard to extract and move these things forward. That's why you see it sort of struggle year in and year out to get dollars spent. There's just an incredible amount of paperwork to move with a lot of these projects. Or you'll get it and all of a sudden other things will come up like, oh, the safety quotient on this had an escalator of 20%, and do we need to go back again and do another study on that? So we're actually finding that this issue really predates COVID.
Okay.
Yeah.
Gotcha. Thank you. No other questions?
Any other questions? No. All right. I think we can move on to the next slide.
Okay, so here we have our required reporting on trust funds for the second quarter of fiscal 21. So we have the Gen Ed, health, and capital improvement fee reports here, as well as the vendor expenditures. So you will see a trend that's similar to what we saw in the previous quarter, that some of the expenses are coming in under budget. This can be attributed to our use of the CARES and the GEARS grant funding and possible timing due to much of our operations being performed remotely. Any questions on any of these reports?
Nope.
Okay. Next couple of slides, John. One more. And one more. Investment subcommittee, back to Mac.
Yeah, so we had our investment subcommittee meeting, excuse me, last week, and always a good update from Michael Chase. You know, the highlights essentially are, you know, as we know, we had a really good fourth quarter, and we're seeing that reflected in our results. When you look at our both short and long-term performance relative to benchmarks, you know, we exceeded, you know, and again, the main thing for me was there's constant management of our account. We're not just put to the side and just let it run based upon our allocation methodologies or some of the fund managers that have been picked. There seems to be really active, per Michael Chase's discussion with us, per active management of our account and changes made to optimize our overall funding. So again, it was good conversation, good results from returns, and again, a very good discussion, well-rounded discussion with Michael Chase. Any questions?
Can I add that note that I shared at the investment committee, right, which is all in under investment is about 18 million now. And the sort of piece to call out for trustees, particularly new, is with this quasi endowment, right, that we have, that figure matches basically where we started when the fund was set up back in 2014, 2015. I say that because significantly, not only have you funded things like a core switch for 420,000, you also spent 3 million to make it happen for the Student Learning Commons. And so over now from about 2016 to today, we've bounced back with some obviously management internal to the college, but also with some help from the stock market. So it's great to see a sort of return, if you will, to home base that way. And I think that's the context we want to make sure we put in front of you when we think about the next capital project, the next investment, this Building 20 relocation. So you see, it's been just so helpful for your help to invest these funds for some of these major infrastructure projects.
Yep. Thank you for that, Dr. Cook. Yeah, it was interesting to see that we bounced back, you know, even though to your point, we made some pretty sizable investments, we bounced back from an overall balance standpoint. So, I mean, the market performance has helped considerably, but, you know, at the end of the day, to your point, we offset those expenditures. So thanks for that update. No old business, any new business? Okay. All right, I guess our next meeting is March 15th. And with that, when we take the roll to adjourn the meeting.
Yes. Mary Kate Murin,
Yes.
Max Starks,
Yes.
Vicky Krause,
Yes.
Eric Hagopian.
Yes.
Maurice Lindsay. Did we lose Maurice? No. Jeff Sattler,
Yes.
and Janae McDonald.
Yes.
Thank you.
Great. Thank you all. Thank you, Nene.